Okay, good afternoon, everyone. Thank you so much for joining. I apologize that we're a few minutes behind starting. Um, this is the Keeping It in the Family Forestry Landowner um, program that we are overseeing in 18 counties in Southwest Arkansas. As we reached out to some of our landowners, they expressed an interest in hearing from an accountant on some record keeping tips and also tax tips for the upcoming year. So I hope you find this training informative.
Uh,
If you have any
can we
questions,
give a quick help to Daryl? So I'm a,
if you have any questions, please leave your questions or comments in the chat box. Um, I guess, Karen, do you have anything that you would like to say before we turn it over to Miss Greenway?
No, I'm good.
Okay. Are you ready?
Yes, I'm
Yes,
ready.
Okay. Good afternoon. Thank you so much for allowing me the opportunity to participate in this conference with you. I'll make my excuses up front, like my mama did whenever she had us over for a meal. Um, maybe some of you do this, or your grandparents or parents do this. You know, I overcook the roast, the peas have more salt. So I'm going to start off by saying that this is my first Zoom conference on this side of the camera. I do, however, have some experience in educating and sharing my knowledge and love of income taxes, but it's been in front of a live audience. Um, so anything that you would like to add or question or suggest during this, you surely will not offend me. Uh, I was originally requested to speak on record keeping. That's the topic with which we will begin our discussion. I requested questions from you and have received quite a few. For the most part, they extend beyond basic record keeping. I'll try to address as many of these questions as possible. A lot of them, while sounding like simple questions, are very technical and complicated. My hope is that at least while when you leave this hour, you'll leave it with that you might need to seek further counsel or guidance on. So, record keeping for forestry and landowners is really not that much different than for any other taxpayers. Record keeping is basically a systematic, timely recording of transactions that details the type, the purpose, and the amount. And these amounts are crucial for proper management of long term forest investments and tax compliance. In addition, accurate records, when you add them with your knowledge of the federal income tax rules, that will allow you to ensure fair tax treatment of the income and expenses associated with your ownership, because you definitely do not want to pay more taxes than you should. So, one of the questions I received was what records need to be kept in preparation for tax filing? So you have to keep in mind always that the potential for an audit exists. So you should keep books and records sufficient for a tax audit. So what does that mean? Well, it means that the records should exist, they should be in good form and accessible. An auditor could insist that you produce the backup for the amounts that you included on your tax return. In fact, that's really what an audit is. They will insist that you produce evidence of your deductions. And then, as I'm sure you've probably have or are going to have some conferences on management plans, these same records can aid you in that area also. So there's several options we have for our record keeping system. The first one, which we jokingly call the shoebox method, is when you basically just dump everything in a box and bring it to your accountant or your tax preparer at the end of the year. If you have a significant amount of transactions, or even if you don't, this is really the least favorable method because as it, it's unorganized. You have to dig through everything to find out what you're looking for. The second method is a journal or a notebook, and that would just be simply a piece of paper where you list out anything that you think is important, or all the expenses that you incurred, the income, dates, amounts. If you don't have very many records to keep up with, or very few transactions, this method could be sufficient. You just need to make sure that you maintain these notebooks. Of course, what accountants prefer in most cases is a double entry set of books. And this is, the old general ledger that you hear about, where you have debits and credits. Our preferred method or system for double entry set of books in our office is QuickBooks. Um, this is a wonderful computer program. It's easy to use, and it is, it's indefinite as far as the amount of transactions for the most part that you can put in there. It also has a nice feature that, let's just say you're paying a certain bill. After you enter the check, you can even write your check from QuickBooks, but you have the ability to attach the invoice to that check. So if you happen to look up the true value check, the invoice would also be readily accessible. So you don't file with all your paid invoices in it. So the type and the method that you would choose to use depends on several factors, some of which are the quantity of transactions and the computer and bookkeeping skills of the owner. Um, Now, another question that we get every year during the year is, how long should I keep these records? So some records are to be kept permanently, or at least as long as the asset is still in your hands. Examples of this type of record are your deeds, your timber cruises, and your equipment invoices. We recommend that all other information be kept for at least 5 years. This includes your bank statements, receipts, credit card statements, and this other income items. Now, the reason we suggest 5 years is because basically that is the statute of limitations. But if the IRS was to audit and find fraud, then they have the ability to go back for a much longer period of time. I sent to Candy a brochure we have about record keeping that I think she'll probably share with you later, that has got some of this detailed out in it in greater detail. Now, one thing I found is that it's often thought that, well, I use my credit card to pay for it, so that's a good enough receipt. Well, it's not, because I've had a couple of IRS audits where the taxpayer was required to go back and find the original invoice that was generated when they actually made the credit card charge. So more than likely, if you are audited, you will be required to produce this invoice or receipt. So every good record should contain, at a minimum, the date, the dollar amount, and the details of what exactly the purchase was. So, for example, if you're on a business trip and you stop to get gas and you use your credit card, you should keep the receipt that prints out from the pump. That a lot of us don't like to. We like to decline that offer to print. So now let's think about the requirements that we said were necessary. So the date, well, that'll be on that ticket. The dollar amount, of course, will be on the ticket, and it'll be obvious that it was for gas because it'll also include that. Now, I suggest that you take that ticket and write on there, for instance, that you made a trip to Arkansas and the purpose of the meeting was to meet with your forester or your accountant, or just, have a general look over of your property. So in that case, you would have met all of the requirements for proper documentation. And a lot of people will keep a calendar in their vehicle because sometimes you want to take mileage instead of actual expenditures. And so instead of keeping up with your gas receipts, you'll just keep up with your business miles. And if you choose to go that route, then you need to keep a calendar or a diary where you write down your number of miles and the reason and purpose for the trip. Now, we also recommend that you open a separate bank account from which to conduct your timber and landowner operations. It's so much simpler at the end of the year to have all of your income and expenses in one account so that you don't have to wade through personal bank statements looking for business items. And your accountant would appreciate this for sure, and you'll be happier too, especially now that we have the image copies on our bank statements. In the olden days, we could just go through there and pull out checks that were specific to our business and bundle them together, but that's not the case now. It's much more difficult to segregate business items from a personal bank statement. So, would anybody have any questions about record keeping before we move on from this particular area to the next? Okay. Then another question that I received was to please explain the difference between capital expenses and operating expenses. So, what is deductible? So, there are basically three types of expenditures. One is a capital expenditure, and this is where the term basis comes into that we're going to talk about more a little later on. The capital expenditures are normally recoverable or deductible through depreciation, depletion, or when the assets are sold or disposed. So, capital expenditures are monies which are spent to improve or increase the value of real property. Examples of capital expenditures are costs incurred for the purchase of the land, the timber, the buildings, any machinery and equipment which has an estimated useful life of over 1 year. Now, in certain cases, site preparation, tree planting, seedlings, and for major repairs that prolong the life are capital items. Some expenditures, which are classified as capital expenditures, will become a permanent cost of the property. Others will be recovered over a period of time in the form of depreciation. And we go to classes all the time about depreciation, and that's a day of class in itself because there's so many methods now and so many options which are dependent on the income from the property. They've increased what they call the Section 179 expensing. So you can actually write off up to $1 million of capital expenditures, but not land. This would be in the form of for expenditures for machinery and equipment. But then there's other limitations that come into play that where your whole tax return is coordinated, that's actually deductible. So this is significant because capital costs cannot usually be deducted from income in the year in which the money is spent. There are exceptions to this, like the increased depreciation method I just mentioned, or reforestation expenses. So that handles the capital improvements. Now, the second form of an expense that's deductible for your business is just a operating expense. And so the terminology that you are the words ordinary and necessary. The IRS likes that term. So this means exactly what it says. To be deductible, the business expenses must be ordinary and necessary. This means ordinary and necessary for your business, one which ordinarily occurs in this type of business and is necessary to run your business. So if you meet those two things, then it's deductible. So let's think a minute. What would be some examples of ordinary and necessary expenses for a timber business? Well, of course, you have your property taxes to pay every year. You have legal fees, perhaps, accounting fees. Maybe you have to rent or purchase some equipment necessary for stand maintenance. a consultant's fee, or perhaps you're paying someone to manage your timber stand. That bank account that I suggested earlier that you open up, it might have a bank service fee every month. That's deductible. So maybe you had to incur some additional expenses at your house for computers or internet in order to be able to participate in this conference. That could qualify as an educational expense. Or maybe you took a trip whenever COVID-19 is over to go to a seminar out of state or out of town. Those are educational expenses. Those are deductible. And then just your normal everyday office expenses are deductible. For instance, if you had to buy computer checks or computer programs, postage, all of that type of thing. So I had a question from a participant. What records are recommended for succession record keeping? So I assume that this has a lot to do with the basis going forward and what am I going to pass this down to my children. So if you're thinking long term, I just really have to recommend a computerized record keeping system. Um, that way it's all there on your computer and you have a good backup. It's on a jump drive. When at some point, if you're the person in charge of the bookkeeping and then you're no longer able or willing to do that anymore, it's just real simple to pass that along to the next generation, someone you trust that can do as good of a job as you've been. You can scan in your deeds and records, and all your timber sales and everything will be in that computerized journal ledger package. So when you record that, for instance, when you record that original transaction to set up the basis in your timber property, you can type in as much detail as you want. For instance, if you could say 50 acres inherited in 1990, and that way when your child or your granddaughter or someone is looking back, then they'll say, oh, that's how we got that 50 acres. I wondered about that. And of course, you should keep your originals of these documents in your lockbox or somewhere safe. Does anybody have any questions now or before we're going to move on to basis? Okay, basis. Basis is a very technical accounting and tax term, even though it doesn't sound like much. So basis is like the the determining factor in if and how much of a deduction we're going to get. And we're all about some deductions. So basis is the value that is to be entered into the capital asset. And it depends on how you obtain this property. So the original basis is going to go up and down throughout the period of time the land is held as improvements are made to the asset or depreciation or depletion is incurred. So it seems like there's been a lot of things that we have three options. Well, basis is another item that there's basically three ways that you can acquire basis. And it's determined depending on the manner in which the asset was acquired. So the first and simplest method of determining basis and acquiring the asset is if you purchase the asset. So that in that case, the basis is simply the total cost of acquisition. So I mentioned total cost. So that is cash plus amount financed. For instance, if I determine that I need a John Deere mower tractor to keep the property nice and neat, that would be an ordinary necessary business expense. So the local John Deere store is having a great deal and I can finance this tractor over 7 years. So I'll need to make a $10,000 finance 30. Well, I can go ahead and start depreciation on the entire 40,000 as long as the asset is placed in service by the end of the year. So it doesn't matter that I only put down that $10,000 down payment, the entire 40 is subject to depreciation. The second method, which is a common method of acquiring basis, is if the property is inherited. So under this basis of an inherited property is the fair market value at the decedent's death. So if you're talking about a significant amount of money, this is a case where you're going to be in an advantage in an IRS audit if you have had some type of formal appraisal done by a timber person, a forester, or someone in the timber management business. And there's there's things called 6-month alternate valuation dates and all that, but I don't really think normally in a timber situation that's not really going to be important. So basically you just need to think, if you inherited this property, your basis is the basis at the fair market value of the decedent's death. So what does that mean? That means that if my grandfather died yesterday and left all that property to me, and tomorrow I decide to sell that property, I will pay no tax because there will be no gain, because my sales price would be the fair market value at the decedent's death. The third way that I can acquire basis is through a gift. Now, in most cases, in a gift situation, the basis is the basis in the hands of the donor or the person that gave me the property. This is really an important fact, and this comes up often, and it's an item that is most often misunderstood. A gift before death does not receive a basis step up. This is a gift, not an inheritance. Oftentimes in elder care planning, you run into this where we're trying to get grandmother or mother qualified for the nursing home at some point, and so for Medicaid planning. And so people will start giving away property close to death, and people have you'll say, well, how'd you get this property? And they say, well, I inherited it. And then the next question has to be, well, did you inherit it before your grandmother died or after? And they'll say, oh, she gave it to me a year before she. That's not an inheritance, that's a gift. And in most often, that property's been in the family for forever. And so the basis would be very small. And so if that was the case, and you turned around and sold that property immediately after the death, you're going to have a lot of tax to pay. So some of you, in speaking with you over the phone over the past several months, I know you've got like some families with several generations that are, like, for instance, if you want to put your land together into some type of management company where everything is so excuse me, I was distracted by my computer. So you could have, if you have multiple properties and multiple owners of a partnership, then you could end up with different people with differing bases in the same property. So if I have property that I have had since 1950, but then my niece has property that she just inherited from her mother who just passed away, her basis is going to be much higher than mine. And so there's special allocations that are done when the timber starts, when you start to sell timber or you dispose of the property. So if you have this type of situation, it can be very complicated, and you probably want to make sure on the front end that you have all that set up right. But in all of these instances that we just discussed, it's important to allocate the original basis between the raw land, the young growth, and the merchantable timber. And the reason for this is that when you sell the timber from the property, you're going to take some of that original cost against the sales price, and you're only going to pay taxes on the difference. So, and when you most often sales contracts, they don't detail out those different prices. They'll just say you paid $5,000 an acre or whatever for that property. And so you're going to need someone in the timber industry to break that down for you as in a fair market value proportion. It says, yeah, you paid $5,000 an acre, but 1,000 was the raw land, and $3,000 was the timber, and 1,000 was the growth, the young growth. So that if you turn around and sell that timber shortly thereafter that's ready to go, you won't have to pay taxes on all the gain. You'll offset the amount that was allocated to that at the beginning against that. Now, a lot of times so you may be thinking, well, I've had this property and I didn't do any of that. So what does that mean? Where am I now when we're getting ready to sell this timber. Well, it's not too late because the timber guys, they know how to go back and use fair market value based on today's date, and they do these negative growth rates, and they'll go back and say, well, yeah, if it's got this much timber on it now, it probably had that much timber on it back then. So it's all's not lost if you haven't done that. So those numbers that you're going to come up with when you do that allocation of basis, those numbers go on the IRS Form T, timber, and that was one of the questions I received. What is a T form? So a T form is an IRS form, and it's used to provide information on timber accounts if you happen to have a sale of timber during the year, and it's supposed to be completed and attached to your return. If you claim a depletion deduction or make some special elections to treat the cutting of timber as a sale. So that's another thing that is a special little trick or an advantage for a timber owner. Um, Normally, if I sell my asset, it's like if I'm a farmer and I'm selling soybeans, it's ordinary income. But for timber, even though you're taking all those expenses as ordinary expenses, you have the ability to make a capital gain election so that you can go in and get special capital gains. So I just received a question from someone, and it says, we purchased land 10 years ago, but only now are looking to sell timber. Should we incorporate as a business first? So that is, oh, I see that is private, and I'm supposed to answer that privately. So see, I've already made one of those mistakes. So I will answer you back privately later. Sorry about that. So we just talked about a 1099-T. All right, so one of the questions I received was basically inquiring about the 1099 that you as a landowner, timber owner, would probably receive from the USDA if you had done some conservation practices, and wanted to know how it would affect income taxes. So if you got a cost sharing payment, generally that's going to be reported as part of your gross income. You can choose to exclude a portion from your income if the payment is one that qualifies, and basically it cannot improve the value of your property. So an EQIP program or CRP payment program, those all qualified. There's a fancy calculation that you go through where you can exclude the greater of 250 per acre or 10% of the average annual income, blah, blah, blah. We don't normally make this exclusion election because if the property is ever sold, then that income is taxed as ordinary income at the date of sale. So we normally just go and report that this year. So, and this is kind of a complicated issue too, because if it's an EQIP program and I have purchased some equipment to plant these trees or the actual planting of the seedlings, then I can take that money that I receive from the government and offset the cost. So there is particular reporting that's required for this type of 1099, and this is one of the things that the IRS checks against your tax return to make sure that it's actually on there. It's a 1099 matching program, so you would want to make sure that it's handled properly, or you'll get a notice from the IRS. Okay, so here's the question. I would like to know the answer to the question about acquiring land years back and whether the business entity should set up before purchase. In my case, there are multiple generations with ownership. I'm not sure exactly what you mean by set up before selling timber. I think that it would be easier to report if you did go ahead and set up a business prior to the selling of the timber, because that way there'll be one tax return done, and then you'll do K1s, which is a information return that is handed out to each owner of or member of the partnership, say. Um, that's one way to handle it. The other way to handle it would just be like as a joint venture type, where you don't actually have a specific entity set up, and then each person would have to keep up with their own basis, and they would just get their percentage of the income, and they'd be on their own to determine their gain or loss. You know, a lot of these questions are dependent on the individuals involved and how sophisticated they are, and whether or not you feel a responsibility to information and help them wade through it. And is this going to be another question I would ask you? Well, is this going to be a one-time event, or so maybe we don't want to go to all the trouble to set up an entity just to sell this one time timber? So that's really something you need to talk to your person that is familiar with you and your family. And it's not really a one size fits all answer to that question. You're not going to get a tax advantage out of setting up the entity. It's just going to depend on what is easier for you in this situation to provide everybody with the information. Okay, active versus passive was another question I received. Now that in itself is a 2-day course. So active and passive came about, I don't know, maybe 20 years or so ago. And it was, the reason was to try to put down some of these tax shelters that were happening. Um, Active basically means you're going to get to take the deduction as long as you've got basis, and passive means you're probably not. You divide this income up into buckets. It's active, passive, and investment. So the first thing you have to do is determine what bucket is your activity going into. You have to make that determination each year, because you think about it, your involvement in this property could change from year to year. So again, we've got 3 different instances. The first one is it could be a personal activity. So an example of a personal activity is maybe you have a residence on this property that you've acquired or inherited, or maybe you just want to go there and hunt and fish and enjoy the nature and take some walks. So in that case, none of your expenses are deductible as business expenses. The second option or possibility is that it's an investment property. And this means that in your mindset, eventually you would like to make a profit, but that's not your primary goal or your major source of income. Absentee owners often qualify as investors because their management does not level of trade or business. Still, their primary motive is to make a profit, not just for personal enjoyment. So they would profit from growing the timber or asset appreciation and have occasional sales, similar to if you purchase Walmart stock. Now, the third and the best option in order to be able to take a deduction is a business motive. So in this case, you've entered into this and are carrying on the management of your forest property primarily for profit, and your activity is more regular and frequent. Those are important words. Regular, active, continuous profit-making activities. So once you decide that you have a business and it's not personal or investment, then you drop down another line and you say, okay, is this passive or active? So you only have an active interest in a business if you materially participate. That means you or your spouse participate on a regular and continuous substantial basis. The IRS has set in place a list of determining factors to determine if you are active or passive. I've had several audits where we had to prove that we were actively involved by documentation and of how exactly how much time we devoted to this activity. This is done on an individual level and not at the entity level. So, like if one person is actively involved, that doesn't necessarily mean that everybody else in the partnership is actively involved. the primary determining factor as to active involvement is the number of hours in which you or your spouse participate. So you can add you and your spouses together, or let's just say you have a full-time job, but your spouse is retired, so they're doing the 500 hours, then that would still mean that you could be actively involved. So think about it, inside this entity, you can have several levels of participation. That's a very good question. Hiring someone to go to the property on your behalf, be active involvement. I just read those rules the other day, and I'm not going to speak with 100% confidence on this, but I'm pretty sure there's like 5 tests that you have to go through, and one of them is that I think that could possibly be a problem. So I'd like to have the option to get back with you on that and provide you with more information, because there's all these caveats and ifs, ors, and buts on that. So, let's see. If you're not active, then you're passive. So now we say, okay, so what does that mean? Well, that means that you can only take passive losses against passive income. It doesn't have to be that particular property. I can have some like residential rental property that's a passive activity, or I could be involved in another business as a silent investor, and that's a passive activity. So those expenses, that if we have an overall loss on our timber property and it is determined that we're passive, then we hold those losses in a bucket until we have something else that we can offset against them. For instance, I have a client that has a condominium in Florida, and she has a loss every year, but when she decides to sell that condo, hopefully she'll then have a gain, and all those losses will free up, and they'll be able to be deducted at that point against the gain. So if you determine that your timber is owned as a business and you are materially participating, then your expenses are fully deductible on Schedule C. This is the optimum situation. Now, if you're a farmer and then you also have timber activity, you report these transactions on a Schedule F. So now, if you're holding that timber as an investment, then those expenses after 2018, they are no longer deductible, so that's not good. But you can still take your taxes and your interest expense as itemized deductions. But a lot of us don't itemize anymore after the last change in the tax laws. Okay. I am going to move on to the next question, which y'all had several questions on this, and it's like, what tax filings are necessary for LLCs and or trust? So an LLC is limited liability company. That's a separate legal entity that it can be, the benefit of an LLC is that you get liability protection if you operate it as a true business and don't do anything that would allow someone to pierce the corporate veil. But an LLC then is taxed either as a C corporation, an S corporation, as a partnership. Most of ours are taxed as partnerships. So the choice of entity, if you go C, S, or partnership, that's going to determine the form filed. So in most cases, you are going to elect to be taxed as a partnership. And in that case, you're going to file a Form 1065. And an S corporation and a partnership are what we call flow-through entities. And that means the income is not taxed as at the partnership level, but it flows through to the owners, and they get one of those Schedule Ks that I mentioned, a K1 that I mentioned earlier, that reports their share of the income and expense. Now, if you're holding this property in a trust, then you're going to file a Form 1041. And you have to look back to the original trust agreement to determine how the income is going to flow and how it's going to be taxed. If it's a simple trust, then it's taxed at the beneficiary level and it flows through, other than capital gains normally stay inside the trust. And if it's a complex trust, then if there are no distributions that year, then the beneficiaries, I mean, the entity pays the tax. And that is really not usually a good situation because trust rates are significantly higher than individual rates. So this also, trusts are pretty complicated. And so you would want to make sure you're following your trust document, and you need some help and some guidance on this. And then as far as other filings, after you get your basic income tax return filed, if you have an LLC or a corporation, you're going to have to file a franchise tax return. And that depends, different states have different rules, but it's basically going to depend on the state in which you're incorporated. Now, keep in mind that if you've got real property in the state of Arkansas, but you're actually a resident in another state, that income is taxable in the state of Arkansas. And then, but you would not pay taxes on it twice. So if you're um, Virginia, you would pay your Arkansas tax and then get a credit for that tax on your Virginia return, so you wouldn't pay tax on it twice. I do not recommend holding any asset that's going to appreciate in value into a C corporation. So because of the issue that there's double taxation when you try to sell that property or take it out. So that's not a good thing to do. So in addition to your income tax return and your franchise tax return, you may also have to file 1099s. Those are usually due around the end of January. And if you hire someone for a service and pay them over $600 in a year cumulative, you're required to file a 1099. And if you hire somebody as your employee, then you would be required to file payroll reports and W-2s and all that. So as you can see, the choice of entity, active versus passive basis, these are complicated issues. And the best advice that I could give to you is that you need to have a team. And this is with any business. You have a team of professionals which you get along well, and it's very important that they all get along well together so that they're communicating and people aren't just fighting against each other, not literally, but just, that they're leaving people out of the loop. So you're going to need an attorney, possibly an accountant, possibly, and a forester. So remember, though, through this whole process that you're the leader and you're in charge, and that you should be responsible for making sure everybody is communicating. If you are like to do research, I suggest the USDA. They have some really good research available. They had a large book that they came out with in 2013 that talks about timber taxation, and then they updated it in 2018 with just like a 2-page document that had to do with the 2017 tax law changes. So that is all I had today. Okay. I see a question. If you give someone a stipend for helping, do you have to report? Yes, that would be a service. And if you want to deduct that, then you would have to report that to them on a 1099 if it's over $600. Does anyone else have any other questions? And again, I apologize if I didn't address all the questions that you email, but some of them were pretty technical and I wasn't. I'm sorry.
Someone was asking about a step up in basis.
Yes, the basis step up.
Mhm.
Okay.
Could you?
So
Yeah.
I can talk about basis step up, sure. Okay, so basis step up incurs basically when you've had I assume, is he talking about in an inheritance situation where there's been a death? Because
Yes.
okay, so that goes back to what we were talking about earlier, where your basis, if you inherit the property, it's the basis at the date of death. And so you would need to go get an appraisal. and from somebody, and then you would have that documented. So that's your new basis going forward. So for instance, if you inherited a tractor that was bought 15 years ago, but it's worth $10,000, then that you need an equipment dealer to tell you that that tractor is worth $10,000. So you get to start depreciating that tractor all over again, just like it was brand new. And the same thing goes, your timber person would come out there and you'd get a timber cruise and they'd tell you like the raw land is worth this much, the timber is worth this much. And as you sell that timber, then you don't pay taxes on the whole amount of the proceeds, just the amount of the difference that you receive at that point and the point of death. Now, if that property is already held in a partnership, then it's important that the tax preparer do what they call a 754 election, which is a basis step up election, and that's necessary to get your new basis. So basis step up is really important, but you need to document it and get that proof of the fair market value. Do we need a farm ID number to sell timber? I would not think so, but I don't know. I have a feeling that whoever you're selling that timber to may hand you a W-9 and request a federal ID number. So um, I think that I can't answer that question, and I don't know. A lot of that's going to depend on who you're selling the timber to. They may just take your social security number. You don't need a farm ID number, but they're going to need some kind of ID number. And the best situation is if the ID number that you give them matches how it's going to be reported. So if you're going to pick it up on your personal return, then you would want to give them your social security number. If you're going to put it in some type of partnership, you would want to give them the partnership federal ID number, but not necessarily there is really no such ID number. So chance you do at the end of the year, um, something that you may have sold it in your name, but it got divided out to multiple people, there's ways to handle that on other 1099 so that the IRS isn't looking at you for all that income.
Okay. I was gonna put this on the screen for a minute. This is the one of the forms you were talking about.
Okay. Yes, this is the form that we send out in all our tax packets at the end of the year, because this is just a question everybody has. How long do I keep those records? So, and it's not all business related. A lot of it is personal. So this would just be something you might want to print and just to keep for reference. And as it's talking about electronic records, which I'm all for electronic records, we've implemented that in our office now. We try to scan all of our documents and just get rid of our hard copies. A lot of people want their tax returns in electronic format now. So as long as you've got it backed up somewhere, you're in good shape. But you definitely don't want it all stored on your computer. You want some type of backing it up, even if it's just backing up to a jump drive, and you have to think about where you're going to keep that, because you might want to put it in a lockbox, because if by chance you have a house fire, that would be bad.
I didn't think about that.
Yeah.
Okay. You had any more? Okay. Okay.
There's another handout that.
Okay, I'll get to that one now.
Yeah, okay. Will you provide a copy to participate? Okay, I guess that's to you maybe. So.
Oh, yes.
Yeah.
Yes, I can provide a copy. I just will, if you put your email in the chat box, we'll be able to get you a copy of it. Okay, here's the other one.
And this goes back to what we talked about on, is it capital or ordinary expense? So the terminology here is just different. It's called repairs versus improvements. So if you think about an improvement, that's something that you got to set up and depreciate. And a repair is something that you're going to be able to deduct during that year. And it talks about the business use requirement also.
Okay.
So if you do back on the basis question, if you inherit property, you need to make sure that if there's a barn on that property, that you separate out barn, or if there's fencing, anything like that that could be depreciated over a shorter life or depreciated, you need to get that so that that can go on your tax return, because the actual land is not depreciable, and the timber is only going to be, you're only going to get a deduction for that timber basis when you actually sell the timber. Or you also can get some type of a casualty deduction. Let's just say, like we had this past year, a tornado comes through or a hurricane, and you have a destruction of your timber. So you get a deduction if it's business property, you get a deduction for the difference between or basically for the destruction of the property. So that's another example where basis is important. So for all vendors, you pay over $600, or you're required to issue a 1099. This is only for services, not vendors. So if I pay someone that $650 to repair my tractor, yes, I'm supposed to give them a 1099. But if that $650 has $400 worth of parts in it, then no. Now, for some reason, the IRS doesn't trust attorneys, apparently, because you have to give an attorney a 1099 regardless of how much you pay them. But and you don't give 1099s to corporations, but for partnerships, individuals, LLCs, if you pay for a service, you're supposed to provide a 1099.
Okay. All right. Are there any other questions for Ms. Greenway?
Do we need a fence to get timber cut to allocate property lines? Now, I'm not sure about that. I don't think I'm qualified to answer that question. That might be more of a legal question.
Yeah, I think so too.
You have to identify the bound areas.
Well, she said she's not legal.
Oh, okay, that's right.
I do think that the forester may be able to address surveying and marking boundaries.
Mm-hmm. I think, yeah, that's outside of my area of expertise.
Equal payments.
Hmm.
I think that's the equal payments.
Okay. Oh, well, are there any other questions? Okay. Candy, do you have anything?
No, not at this time. Some of you should have received an email on Ms. Greenway's fact sheets, but we will double check. And for those that have not, we will make sure you receive the fact sheets from Ms. Greenway.
Okay, well, I enjoyed it, and I hope that you learned something, or at least you learned that you may have more questions than you thought. So just if I haven't answered your question, just feel free to email me, and I'll try to do the best I can to answer it. So y'all have a good afternoon in the rest of your course, and thank you so much for inviting me.
Thank you so very, very much.
You're welcome. It was my pleasure. Maybe someday we can do this in person. I can walk around and move my hands and all that. So,
Yes.
okay. All right. Thank you. I'm fixing to sign off now and get back to tax returns.
Okay. All right.
All right. Thanks. Bye.
Bye-bye. Okay. All right. Next, we're gonna continue with our meeting. Next, we'll have Mr. Joe Friend. He's gonna talk about forestry and conservation programs. You have to unmute Joe. You want to talk until he gets on?
Okay, I think trying to get unmuted.
Yeah, we can hear you now.
Okay, and I'm trying to get my video up. All right, here I am. Okay, I tried to prepare a PowerPoint and I didn't have any luck in that. I did send Karen a document to see if she could put up for me, but if not, that's okay too. I want to talk to you a little bit today about forest management practices and cost share assistance that might be available for those practices. Through the assistance from the NRCS office, and that's Natural Resource Conservation Service, but through the assistance from their office, there are several cost share practices that will help forest landowners establish or maintain a healthy forest stand on their property and make it accessible for them to be able to achieve their goals in the future. And Karen, were you able to pull up that?
Yes, I'm about to bring it up now.
Okay.
Okay.
I had some pictures that's with some actual practices that we had helped landowners with that I wanted to put up and show you, and I never could get them put into a PowerPoint. Somehow between my phone and my computer, I had problems and they didn't copy. So we're going to go a little different route with it. And hopefully in the near future, we'll be able to establish a PowerPoint that will let you see some of the practices that we are doing. This document is a little paper that Karen fixed up for us so that when we go out and visit a landowner's property, we can check off things that we feel like the landowner needs to improve their property or to make their property more useful and more profitable to them. One of those practices, access roads, you really have to have some special circumstances before the NRCS will cost share paying for an access road. If you have area of your property you can't get to, sometimes they will assist with establishing an access road, but that's one, to be honest, we have not used up to this point. The fire break, that is one that several of our landowners is using, and the purpose of that is to help you have fire protection for your property. Normally that fire break is made 15 foot wide, and it will be made with water bars and other improvements necessary to keep your land from eroding. And the purpose of that fire break is to protect your forest from wildfires. This is especially useful when your forest land is been planted with small trees. Small trees are more susceptible to wildfire. So we'd establish that fire break to provide protection to you. And each forest practice has to have a resource concern for the NRCS to use equip funds to help pay for it. And the resource concern as far as a fire break would be protecting your timber. The next one is forest stand improvement. A lot of times your property may have a stand of trees that really has no value to them. There are a lot of species of hardwood trees that are slow growing. They stay kind of small. Basically, all they do is take up space, but yet really do not add value to your property. Some of those species would be things like different trees in the elm species, such as hornbeam and hornbeam and most elm trees. persimmon trees have value for wildlife, but when they're in the early regeneration stages, they're just taking up space. You don't want a whole stand of persimmon, holly trees. There's several trees that really are not going to bring you a lot of value, like the pine trees and the oak, different species of oak trees would. So forest stand improvement, a lot of times when you have a forest stand that has those species in, and yet you've got an adequate stocking of good species such as pine or oak, then what you want to do is go in and take out those poor quality or poor species trees to leave your better trees to grow, because trees are growing trees are a lot like planting a garden. If you want to get a really good stand of radishes in your garden, you sow a lot of radish seed. But then if you want them radishes to make a good on the root, after back in there and pick some of them out to where they have room to green plant on top, little skinny root on the bottom. When you're growing trees, you've got to have room for them to grow, and you've got to keep them healthy. If they get overcrowded, they're going to be extremely slow growing. They're going to be insects, and just got to thin them out and keep them grow. And a lot of times the way to do that is where you go in with what we call a hack and squirt method, where you have a squirt bottle with herbicide in it, and you have a hatchet, and you hack through the bark of the tree, and you squirt some of that herbicide into that tree in order to kill that tree, and that way what you leave has more room to grow. Brush management, well, let's go up on herbaceous weed control. A lot of times when you plant a stand of pine trees, when you open that ground up so that you can plant your pine trees, the sunlight is going to cause all of the seed from everything that's been laying on that ground for several years to sprout and grow. And again, those weeds and the grasses that grow can impact the growth of your trees. So we use this herbaceous weed control to usually a one-time application, just to give your trees 1 year of good growth, so any competition. Brush management, and we've used a lot, as far as forest land, it really come more under the timber stand improvement. Now, if you have pasture or something, then you would probably could need some brush management for that. Fuel break, that's very, very similar to the fire break. The fuel break, with a fire break, you plow a 15-foot wide lane down to bare dirt, where you move everything down to bare dirt. With a fuel break, you may just take out everything except a few big trees here or there in that 15-acre or 15-foot wide area. I don't believe that, I may be wrong, but I don't believe that the NRCS office uses that fuel break practice. I am not really familiar with it being used. Forest trails and landings, normally you don't need that, because normally when they're going to harvest your property, the loggers that do the harvesting is going to make their own landing where they need it, and they're going to make their skid trails where they need them. Now, once that's done, you know, you may want to come back in and seed in that landing or seed in those trails with some type of wild grass or wildlife food. Or if the landing is very big, you may actually want to replant it with trees. Prescribed burning is a practice that EQIP will pay, and it depends on the need for it. Prescribed burning is used for primarily now for site preparation. If you're going to plant an area and you've got it cleared off, usually when they harvest the timber, they're going to leave a lot of logging slash on the property. And so prescribed burning will burn that logging slash up and make it accessible for the tree planters to get into the property. Riparian forest buffers, that primarily comes under some other practices that the NRCS covers, other programs. When I worked with the Division of Forestry back several years ago, we were working with the Conservation Reserve Program in some of the Delta counties. We established a lot of the riparian buffer areas along some of the canals and streams in that area. And what a riparian buffer is where you go back a certain distance from your stream and you plant trees and grass and things that will help reduce erosion and stop any soil movement before it gets into that stream, just to protect the water quality of that stream. Tree and shrub establishment is something we use quite often working with landowners. That's planting your trees. When you clear cut an area and you want to reestablish forest on it, then you're going to have to do some site preparation to get it ready to plant, and then you're going to have to come back in and plant it. And a lot of times, in order to do that, you plant trees. You can plant certain shrubs for wildlife along with those trees. And so that's a cost share that helps pay for the cost of establishing the forest stand. And tree and shrub site preparation, like I said before, you've got to have a way for the planters to get in and be able to plant the trees. A lot of times the site preparation will consist of applying a herbicide, usually by helicopter, to kill all of the unwanted species that's going to grow up once that area is opened up. And then you're going to burn it to give the planters access to get through the property. And that's going to open it up to where once your trees are planted, they've got room to grow and to get established. Sometimes you have to come back the following year and apply a herbaceous weed control. Or if you've got a lot of undesirable species that have came in naturally due to seed that was already on the ground, then you're going to have to use a herbicide that will take care of them. And in areas where you're growing hardwood, a lot of times they use a pre-emergent herbicide before planting, because most herbicides will kill hardwood trees, and you don't want to come back and try to spray over your hardwood trees after you've planted them, or you will kill them. But if you use a pre-emergent herbicide and then you plant seedlings, the pre-emergent's not going to affect them. But normally you do your site preparation. you will apply your herbicide normally in the summer, and then you'll do a controlled burn in the fall, and then you'll plant it sometime between January and March. Tree and shrub pruning, that's a uh, practice that can be used in some areas. I do not know of any place in Arkansas where then RCS is paid for tree and shrub pruning. Woody residue treatment, I don't know if that being done here in Arkansas because in most cases that's taken care of with your site preparation. Now, silvicultural, silvopasture establishment, that's catching on to be a pretty popular thing in Arkansas. Silvopasture is where you grow trees and have pasture for cattle both at the same time. And normally what you do with that is you thin the trees out to a spacing that will be wide enough that it'll allow sunlight to reach the ground and let the grass grow under the trees. And that way you'll have grass for animals, plus you'll have a forest stand also. You need to keep in mind with silvopasture in the long run, you're not going to make as much money off of the trees as you normally would because you're not going to be growing as many trees per acre. We foresters use a term called basal area to kind of think about how many trees we want on a certain piece of property. And basal area is if you cut off a tree 4.5 foot above the ground and took the area of the circle that tree makes, that would be the area of that tree in square feet. And so if you take every tree on the acre and do that, then you come up with a basal area. And normally what we do is of course, we do it by diameter of the tree and figure the basal area that way. But normally you want, for a good healthy forest stand, you want a basal area of about somewhere between 60 and 100 square feet. Once your stand starts growing together enough that you've got a basal area of upwards of 100, especially if it gets above 110, then it's time for you to thin your stand back to about 60 so that it can increase in diameter again and fill that basal area in again. But with silviculture, you're going to maintain about a 40 basal area, 40 to 50 basal area in most cases with silvopasture. So you're going to have a lot lower stocking than you would have when you're normally growing a forest stand. It does work though, because here again, you can have two sources of income because you can have trees and you can have cattle. Now, one thing you cannot do is plant a new stand of trees and put cattle in there because they will either eat the tops out of the trees or they'll rub on them and run them. You've got to have an established forest stand before you can turn it into silvopasture. And land clearing, as far as forestry practices, about the only way that you can get cost share for land clearing, about the only way you would want to do land clearing would be that absolutely and is not in the near future. And when I say near future, 20 years, 30 years, etc. and there are cases like that. There are some times where on property they've gone in and they've logged it and left it to grow back naturally, and the only thing that's seeded back in and grown has been undesirable species. And if you let that land sit there 100 years, you're really not going to come up with very much value at all to it. And in those cases, you may have to just get it. If there's absolutely no merchantable timber on it at all at that point, then you may have to clear it off and then use the site preparation practices and plant trees on it to get a stand established. And that's just some of the practices that can be done. And every forest is different. And to know what to do on your property, the best thing to do is get us to come and look at it, talk to you about what your objectives are, talk to you about what's out there now and what you want it to be in the future, and then prepare you a forest management plan to help you meet your goals. And if you need cost share assistance to establish part of that, then we will help you get signed up with the NRCS office on the EQIP program, where hopefully you can get cost share assistance to carry out some of those goals. And if you have questions, I would entertain questions at this time. Question that I see is, how much does the EQIP pay for silvopasture? I believe, and I don't have the figures in front of me, so don't quote me totally on this, but I believe that it's around $400 and some per acre that they will pay to help establish silvopasture. And I also have another question. What is generally speaking, what is the time frame from site preparation to planting a stand of trees? And she says, I just answered that for her. So, but usually when you get approved by the NRCS under the EQIP program, you've got 2 years to carry out the practice. Because the herbicide does have to be applied during the summer or early fall. I did, but sometimes in addition, if you've got a hard pan, some other reason, sometimes the land has to be ripped. And what ripping is pulling a shank behind a dozer that will go at least 17 inches into the ground and plow a furrow in the ground. And if you do that, then you've got to give the soil time to settle back into those rips, and then you plant the trees in those rips. So you actually start your site preparation in the summer or early fall with your herbicide, and then you follow that with a controlled burn about a month after the herbicide is applied. And then you want to rip the ground, and if that's one of the practices. And when you rip, you need to allow at least 2 months for that ground to settle in. So you want that ripping done in October or November at the latest. And then you come back in. And for South Arkansas, which is where I've spent all of my career actually, I like the planting season actually runs from December. Once the trees get what they call hardened off, that means they've had enough cold weather on them for the nurseries to actually lift them out of the ground and pack them in the packing boxes. Normally in South Arkansas, that's going to be around the 1st of January. And the planting season stops April the 1st. And the reason for that is you get past April 1st, the trees have already got warm enough. Even in a cooler, the trees have started trying to bud out again, and you don't want to plant them once they've started breaking bud, or they're most likely not going to survive. So your planting season generally runs from January the 1st to April the 1st. Sometimes on a case-by-case basis, the forestry department will allow an extension on that if you've had a lot of cold weather and a lot of moisture. I personally like the month of February for planting trees because normally you're over any real cold, hard freezes you're going to get in South Arkansas by the 1st of February. And February is normally a month where you have a lot of light rains, so your soil moisture is real good, and you get your trees planted in February, and that gives them plenty of moisture up until they start putting down roots and start getting established. But that's just my opinion, and really, you know, I don't have scientific information to base that on. It's just February just seems a good month for me for planting trees. Okay, I have another question. Did you mention these programs require farm ID? Yes. If you use any program that the Natural Resource Conservation Service has, then you've got to have a farm number on your property before you can use those programs. And it's real easy to get a farm number once you have a clear title or a clear deed to the property. You just go to the Farm Service Agency and tell them you want to get a farm number for your property, and they will help you with the paperwork you need to fill out, and they will assign you a farm number. And then they will also make that farm number known to the NRCS office so that when you go apply for assistance at the NRCS office, they've already got your farm number and a map of your property, and they can establish what you need to do. Also, I might mention that when you apply for cost share with the NRCS office, they get the Division of Forestry to write a forest management plan for your property, letting them know what you need. So a good way to be a step ahead is to go to the Department of Forestry first, your local county forester, and get them to write you a plan, and then go to the NRCS office. Are there any other questions? If not, Candy or Karen, I am finished.
All right, thank you very much. I put Joe's information in the chat box over there if somebody wants to contact him for further assistance. Now we have our last speaker, which will be Justin Mallett, and are you there, Justin?
Yes, ma'am, I am.
Okay.
Video.
Okay.
All right, can y'all see me? All right, so today I'm talking a little bit about forestry management schedule, and what I'll cover in that is just some of the steps you need to take in managing your forest. The first step that I look at is that you need to evaluate is, can you sell legally without issues on your property? And part of that is you need to have clear ownership to be able to do the management activities you need. And that's best done through a lawyer to verify that it's all, good and right, so that you can prevent yourself from getting in trouble. Once you know that you can do that and there's not going to be any issues, then the next thing I would look into is establishing boundaries on your property. A lot of people know where their boundaries are, or think they know where their boundaries are. Unfortunately, because fences aren't always accurate. If you've seen some of the old fences, it's really easy to, instead of reestablishing the fence where it was originally, it's easier to move over about 6 feet into the pasture and put a new fence in. So the old fences you see may not be exactly on your boundary like you anticipate or you expect. So one of the things that I recommend is establishing your boundaries. And part of that is by getting a survey. Getting a surveyor out there who they go out there and they find the corner markers. Sometimes it'll be a pipe, sometimes it'll be a rebar with a marker on there. They'll find those corner markers, or they'll reestablish those that are missing based on other information that they've found from old surveys and old markers. That's important in my opinion. And I'll go ahead and touch on, somebody asked about building a fence. Fences aren't all that practical for a forest stand. Yes, a fence is a great hard boundary. Fences are better suited for keeping livestock in or keeping people out. If you build a fence and you expect it to stand in the forest, you're going to have to do a lot of work to it, mainly because, trees die, trees lose limbs, they're going to damage that fence. So I don't necessarily recommend building a fence. One great way that I've found that's good for keeping a boundary established is to put T-post at your corner post. Everywhere the survey takes a turn is to put a T-post next to those, and T-post, I'm talking about just the metal fence post. Put those next to the pins, and then there's another way of marking the trees in line of that fence. We call them boundary line markers, where they scrape some of the bark off. They'll paint a circle or 3 lines. That's a great way for establishing your boundary. The fence, you can do that if you wanted to, but a bucket of paint, used to when I was painting boundary lines, I think the tree marking paint, I used about a gallon a mile. That bucket of paint is cheap compared to a chain link or board or barbed wire fence. So that's something that I would do. Make sure you have your boundaries established. Once you have those boundaries established and you know where your property is, the next step that I would do is I would sit down with a forester, with myself, your county forester, or a consulting or forester that you've contracted to work for you. Sit down with them, identify what you want on your property, what your goals with the property is, and what your intentions are. The reason why I say all that is what you want and what your intentions are. Is your intentions to provide for college for your heirs? Is your intentions to just be able to harvest every now and then and supplement your income or your retirement? Is it an investment that you're hoping to, build on and grow to more timberland in the future? Or is it just you want to keep it pretty and you want to hunt out there? Those are all valid wants, valid needs, anything you want. So you need to identify what you want to do with the property. Once you identify what you want to do, you're going to need to kind of make a plan on what steps do you need to take to achieve those. And that's where working with someone like me or a consulting forester is good for that. After that, you may want to hire a forester through contract for cutting timber, for hiring contractors. You can hire contractors yourself, and you can even sell timber yourself. I don't 90% of the time, I do not recommend that. The main reason is a consultant forester or a hired forester that does this stuff for you. He does this day in and day out. He knows what to expect. He knows, most of the time, he knows who to work with, who to trust, and that's a huge benefit for you. Now, they're going to charge you. I can't tell you exactly. I know I've heard from different folks, a county forester, or not a county forester, a registered forester or a consulting forester is probably going to charge you between, I'll just give a ballpark 8 to 12% off your timber sales. They may charge hourly. It's all based on what that forester is that you're working with. But that off the top, whenever they sell your timber, 90 to 99% of the time, and these are ballpark, they're going to make you more money than it's going to cost you off the top. So working with working with an individual professional in that aspect, they take care of a lot of the headaches for you. That forester can market your timber for you. They can sell it to the loggers. They can say, hey, I want this, this, this. He knows where to send the wood and the trees and such. After you work with that forester and get a contract, then he's going to market your timber, and then you working with that forester, you're going to sell your timber. The forester can handle much of that, but in the end, it's still your timber, and you make the final decision. After you sell your timber, depending on what you do, if you say do a clear cut where you cut all the trees out of there, you may want to apply for cost share with the NRCS. And part of that is going and getting your farm ID, like Joe talked about a while ago. So you've got a farm ID for your property, you apply for cost share. Here's where you can hire your own contractors to come in to do the site preparation stuff to get it ready for planting, or you can use that consultant once again for that, and he can help you with the headache. After you've done your cost share and your site prep, then you look into planting your timber. Now, all this stuff that I'm talking about, it's stuff that has to be planned out, and that's where you'll refer back to your management plan. Most management plans that I've seen have a schedule. Mine do. It gives you a schedule of when to do each thing. And so that's a schedule that you can keep. You can write it on your calendar. Keep referring to that. And it's got a lot of information in there for you. You planted your timber. Okay, so now you've got a whole lot of trees out there that you've planted. Now what? Do you just sit back and, leave it alone for the next 30 years? Well, yes and no. After you plant your timber, you're going to want to check on it periodically to make sure that those trees are still growing, that those trees are still healthy, and that nothing's happened out there. One thing that a lot of absentee landowners don't think about is they'll plant trees and then they don't look at it for a long time. Well, what's happened in that time? Has there been a wildfire that's ran through there and killed most of your trees? So it's important to keep up with your property, to look at it, or have somebody to help you to look at it. Sorry, I got distracted there for a minute. So have somebody to look at it for you, to give you suggestions and make sure it's growing as it's expected. And sometimes part of that health is, what if you had a lot of volunteers? What if a lot of trees came in there and you had a prescription of you wanted 454 trees to the acre, and a lot of volunteers came up. Now you have 1,000 trees to the acre. Well, that could be a potential problem. That could stunt the trees that are there. So something that you could do in that time is you could do a pre-commercial thin, where they come in with herbicide. Somebody, there's even ways to come in with a hatchet or a machete or a weed eater with a saw blade on the end of it to thin those trees out. That's going to release your crop trees, your preferred trees. It'll help promote their health, and it'll help them to grow faster. So sometimes you need that pre-commercial thin in there. Not always, but that's one reason to keep checking your property. And then later down the road, in 12 to 15 years, I'm just giving loblolly pine as an example, it's time to look at it to see if it might need a thinning to release the trees and make a little bit of money. Now, that's what we refer to as a commercial thin. And then down the road, as your trees grow, you're going to look at it and evaluate it and see if it needs to be thinned again. Now, whenever you go to thin these trees in the future, unless it's a final thinning, you need to be careful that you pull out the inferior trees. You need to make sure that you pull out the small trees, the trees that aren't as marketable for you, or trees that you don't necessarily want on your property. The reason for that is if you cut all the big trees, all the large trees, because they're worth more money, that can end up coming back on you and actually hurting the productivity of your property. Whenever you cut the large trees, the big trees, the more valuable trees, you're doing what a lot of us in the profession refer to as high grading. So make sure you take out and you release the big, strong, more profitable trees so that they can keep growing. And Joe touched on, talked about the different schedule for planting. So I won't go into that. My little tidbit was short and sweet, but if y'all have some questions, y'all are welcome to ask them now. I did have one question that was emailed to me. And the question was on leasing your land for hunting. I don't deal with leasing property for hunting directly. That is something that many consulting foresters, I won't say all of them, but many of them will work with landowners on finding somebody to lease their property for hunting. If you do lease your property for hunting, make sure you use a contract. Make sure you consult an attorney on that contract to make sure that it's going to release you from liability and release them from liability and make sure it's the best thing for you. Leasing the land for hunting, it's a great way to supplement your income on the property. I know a lot of times it'll pay property taxes on your property just by doing that. And if you have a good hunting club or a good person leasing your property for hunting, they're going to be out there, they're going to be watching your property, and they're going to take care of your property for you. Now that's a good one. Now, sometimes you can get either or, so make sure that there's language in your contract to cover you in case they start damaging the property and you need an exit strategy for that. And like I said, work with a lawyer on that, and a lot of consulting foresters that work with landowners, a lot of them have a standard contract where they're used to dealing with that and they know what potential problems can come in the future. But that can be another asset for your property by paying for your property taxes and having somebody there to kind of make sure it's good, the property's good. So does anybody have any questions for me? I think I covered the boundary lines and the surveys. Okay, so if you want a garden on part of your property, what do I know about that? You can have a garden on your property because it's your property. But just remember, and Joe will agree with me here, anywhere you're not growing trees, you're not making money off your timber. So, you know, it's your property in the end. If you want to grow a garden in part of it, that's your choice. Just keep in mind that trees provide shade around that, so you're going to need a buffer around your garden so that they'll have plenty of sunlight. But as far as expertise on growing a garden, I grow a garden. I'm not an expert at it. It seems like I struggle every year with some new problem. So outside of timber, I can't really give you many recommendations. Miss Casey asked, where can you find info on the value of your land? The value of property fluctuates. If you watch, you know, any of these real estate shows on HGTV, or I don't even have TV anymore, so I don't know what all channels have them. The big thing is location, location, location. So your value of the property is going to be depending on where it is, the productivity of it is if you're looking at timberland. So the best thing for that is to hire an appraiser. And I recommend hiring an appraiser who is familiar with timber markets, with growing timber if you're dealing with timberland. because I can't tell you what it is, because how much it's worth, because I'm not an appraiser. So consult a valid appraiser. Okay, tree barriers you would need for organic. So that I know of, there is no organic certification for timber. Somebody may know of one, but as far as certification for timber, the big ones are Forest Stewardship Council, the American Tree Farm Program, those, and the Sustainable Forestry Initiative, SFI certifications. Those are the only certifications I know for forestry, and those deal with sustainable management of timber. And, you know, in my area, the certification, it's a great thing, a good bragging right. But it's not going to help you as much as some of the areas in Southern Arkansas. Some of the areas in Southern Arkansas, your certification is more helpful in selling your timber because there is some restrictions in mills that they prefer it. There's one mill around here that they have certain days where they only take a certain certification. So it can help you there, but as far as organic, I don't know of any.
Okay.
Pecan trees, that's really out of my area there. So I haven't dealt with any pecan orchards or selling of pecans, so I couldn't honestly tell you anything about that. Karen, did you have something?
I was trying to, Ms.
May I,
Go ahead.
Karen, the person that has questions about pecans, if you could leave your email address and we can send you some resources on pecans.
Yes, that's exactly what I was about to say.
Oh, I'm sorry. Okay.
No, it's okay. That's a good thing. Also, for the individual that asked Justin the question earlier about a garden, I know of one participant who has some forestry practice, who also has cows, and he does vegetable growing production. And he makes use of EQIP NRCS conservation practices for all of those programs. So his is not quite just a garden. It's not very big, but it's a little bit more than, I guess, it would depend on what size you're talking about. But he does have the forestry practice, he has cows, and he has a vegetable production.
There's another question about, are pine trees profitable? Pine trees can be very profitable, but you have to keep in mind of what your market is in your area. In our area, in my area in Southwest Arkansas, there's a huge market for pine trees. So yes, they're profitable here. If you're in an area where you can't get them to a mill, it may not be as profitable. So I'll speak like a lawyer. It depends. So everything depends on all the different variables. So you have to weigh all of those before you make a decision on that. How do you find a consulting forestry management? We have a list of foresters, and Ms. Clardy, I can send you a list. So the list of foresters we have, they can do a lot of the recommendations. Now, the true consultant forester, they have another certification, and that's a smaller list, but I can send that to you as well if you'd like. And I'll make a note of that now.
Okay.
Okay. Did you have anything else that you wanted to add, Miss Karen or Miss Candy?
No, I don't have anything else to add. Let's see. in the garden one, there was another question. Please let me know. I'm thinking organic, but the cattle mixed in with the trees would be great. Okay, well, I have your email addresses in here, so we'll get someone to talk to you about those different programs. Probably someone from NRCS. We have a consultant that will probably be able to speak with you about that. I'm sorry, I'm reading, so if there's a pause in there, questions are still coming in. I'm new to all of this, so I probably could use some of your basic resources. If there are on yours, I would also appreciate sharing documents. Oh, that's a private one, so I'll respond to that privately. Okay. Okay, I'm sorry about that. Someone was asking a question. Okay, well, do we have any other questions for Mr. Mallett?
I think there was one more, pecans versus walnuts.
Mm. Mm. I think that's gonna be for us to look up. Hey,
You want me to jump in there and help a little with that one, Justin?
Yes, sir. If you've got experience with pecans and walnuts, get
Well,
after it.
I grew up in Northwest Arkansas where there were a lot of walnuts, and in fact, there were walnut plantations. Most of the soils in South Arkansas are not conducive for growing walnut trees. Normally, if you don't see a tree growing in the wild or growing naturally, then it's not a good area for that tree. And that's something about the only walnut trees you see in South Arkansas are around a house place. But even if they do grow, you've got markets for pecans. If you're growing good pecans, you don't have any problem selling pecans. Walnuts, unless you're in a specific area where there's a plant that actually produces the walnuts by taking them from the shells, and walnuts are not easy to get out of their shells. But unless you're in an area where they have one of those factories, you're not going to be selling walnuts. Now, once the trees get big, you may sell the walnut trees themselves, but in most cases, if you're trying to grow nut trees, you're better off growing the pecan.
Thank you, Joe.
thank you, Joe. Thank you very much. Okay.
So I guess at this time, Karen, do you mind? Well, first of all, thank you, Justin and Mr. Friend, for taking the time to speak with our participants today. And we will turn it over to Karen so she could make a couple of announcements.
Okay. I'm going to put this up on the screen. These are some of the activities that we will have coming up. We have a CEP, Civil Equality Minority Landowners Conference on November the 2nd at 9 a.m. It's sponsored by Prairie View and A&M and University of Arkansas at Pine Bluff. We will be having a high tonal workshop, which will talk about what you'll be doing in the high tonal during the winter months. We have a FSA borrows training coming up as well. That one will be by invitation only because there's a fee associated with that. So if that is one that you want to attend, please contact us because this is a required training if you're trying to get an FSA loan. Then we're going to have a will and probate workshop. So we anticipate that being a couple of hours. We will have an attorney on and what's that? Another firm that a legal aid firm. I'm sorry, my mind went blank for a second. A legal aid firm and a lawyer will be on that day, so they will be able to answer a lot of questions. Remember, they won't give you legal advice, but they will be able to answer some questions. Then you can go from there. And then we're going to have a virtual outreach, keeping it in the family virtual outreach meeting. We haven't picked that date yet. It's probably going to be an evening or weekend workshop. We're going to work that out to get the details, and so we will be back with that. So you can just continue to check UAPB website and your emails for that information. Other than that, that is all I have, and I would like to thank everyone for your participation, for your questions. Contact us if you need to contact any of us. We'll be glad to assist you any further. If we don't know the information, we will definitely do the research and find the individual and hook you up with that person that would be able to answer your questions. Okay. All right. And that's all I have, Candy. Okay. Okay, I'm looking in here. Okay, again, yes. All right. Okay, great. Well, I am saving the information in the chat box. I didn't put our email address up there, but if anybody, if you're writing, I'm putting my email address in the chat box now, but I'll let you know it's leek@uapb.edu. And you can send me an email and I will get back with everyone. I will let you know about all of the meetings as well, or whatever else, or pass your information on to whoever you're looking for information from. Again, it's leek@uapb.edu, and we are glad to assist you. Is there still an October 28th meeting? We do not have a meeting scheduled for October the 28th. It's clarity because we're still trying. Oh, okay. Justin answered that question. Thank you, Justin. I'm sorry, we're still getting questions, so we're loving this.
And I apologize. The questions are popping up on my phone and I wasn't able to unmute my phone. So I do apologize for that.
It's okay. Okay. All right, well, if that's all we have, again, we want to thank you. Please be advised about our future meetings. And again, if you need our assistance, don't hesitate to contact any of us. The forestry comes out for free. Joe comes out for free. So I would say take advantage of the resources that we have that don't cost you before you have to get into the ones that are going to cost you. We are glad to be of service. Forestry is glad to assist. And we're here for you to help you meet whatever your goals are.
And Miss Karen, if you would, please mention Mr. Lavelle Foote in his role.
Okay. Yes, Mr. Lavelle Foote is also a consultant that works with us. He worked for NRCS for many years. He's very informative about the programs and what you would need to do. And he is the one that actually made the form up that Mr. Friend used. And there are several other forms we use also for different practices. That way you can take advantage of as many practices as you possibly can, because the more points you score, the better chance you have of getting accepted in the equip. So he's very good. And again, it's another free resource. So contacting us, if as far as your forestry or even just some of your basic land or crops or anything like that, we can really help you in a lot of ways. And again, we are not charging. We're just here to assist you. We're working with USDA programs and AFFF, so we can show people that that we are here to help you